Good afternoon, good morning, good evening, everyone, and welcome to Diary of a Trader. Today's video is going to be on ascending channel breakouts. Ascending channels are a series of, they are often referred to as bullish rejection patterns. Typically, in an ascending channel, they can be a part of a broader rising wedge or an ascending triangle. But the thing is with an ascending channel can also be a very, very powerful bullish breakout and bullish continuation pattern. And the reasons for that are related to two factors. The first is based on technicals, and the second is psychological. We're going to go over the technical component first on how you identify these breakouts. So again, an ascending channel is basically it's a tight range that exists over well, actually it's not really a determined amount of time. It's just if you see there's a kind of a channeled series of highs and lows that continue to be reached, that is where we get the ascending channel, and it's in a slope where prices are rising. So right here I've identified an ascending slope that occurred back on November 6th, and we can see that there was a spike up above the channel higher. The problem is that if you were looking at this, you would have seen that the RSI was actually reaching into an overbought zone. The changes to the RSI there's been a lot of changes to the RSI over the last few years. Connie Brown is the one who really kind of made those changes. So the RSI is a bounded oscillator, but we don't keep the default setting. So if something is in a bull market, and that's where you typically see an ascending triangle, an ascending channel appears most often during some type of major bull trend or in a bullish corrective move. You don't often find ascending bullish channels that result in bullish breakouts in bear markets. They typically arrive when we are shifting prices lower. Rather higher. So one of the things that we look for when we're looking at the RSI is if the RSI is in a bull market, we change what is considered the overbought and oversold levels. So in a bull market, we typically see prices finding resistance at 80 to 90 and support between 40 and 30. That is typically where we see the oversold in a bull market. Oversold is between 40 and 30. Overbought is 80 to 90. And one of the ways that we know that this is effective is because this falls into the psychological side of it, is that almost everybody who uses the RSI still uses the default settings and thinks that level 70 is overbought and therefore it should be shorted. Well, a lot of the reasons why you see these rallies that occur after an ascending channel is because so many people are short thinking that it's going to fall, when instead what happens is they end up generating a short-term rally. It's a short, they get squeezed, shorts get squeezed higher. So one of the things that I look for in an ascending channel breakout is I look for an elevated RSI. I want to see that RSI 60 and above when there's an ascending channel. Additionally, the other filter that works here is I want to see price breaking up, like it's touching the Bollinger Bands or it is exceeding the Bollinger Bands. That's the other edge that I look for. This is a short-term. See, an ascending channel is going to be a short-term trade, generally short-term breakout, but it is nonetheless a very powerful and profitable one. So this is one example. If we move over to the right side here, closer to some more recent price action, we can see there's a couple of ascending channel breakouts here, and all around the same area. So you can see that price broke above the ascending channel, and not only that, it broke above the Bollinger Bands. The RSI is at 70, or just a hair above 70. The vertical line is identifying in the RSI and the point and the RSI when we saw the close of this current hourly candle break out above the ascending keep calling it the ascending channel and the Bollinger Bands. All right, and it was a pretty nice sustained move. Did it last forever? No. When you get these ascending moves, they typically do not last that long. You do see a corrective move eventually. But nonetheless, it was a profitable move. The next one that we identified was right here. The RSI was above level 70, and we saw prices pushing up against the Bollinger Bands, indicating that we would have some sustained momentum. This is especially true in Bollinger Band breakouts. If you're going to see price touch or pierce the Bollinger Bands, if it's going to trade higher, if the RSI is at level 60 or below, and you start to see price move above the Bollinger Bands, more than likely you're going to see a sustained move higher. The inverse of that is true when it breaks down lower. So there's that. And then if we go to something more recent, that's what we have right here. Okay, so this was back on the 11th and the 12th of December. We saw price break out of the ascending channel. In addition, it broke above the Bollinger Bands, and the RSI was at level 7. It was a hair above level 70 when this occurred. But now we've got something going on here. We have something that is happening currently. Okay? So what do we read from this? We have an ascending channel. It's a fairly expansive ascending channel, isn't it? It's up against the Bollinger Bands, but what's happening with it? Okay? What's happening with this channel? Prices are not moving higher here. They're having some difficulty breaking out higher. Now, that's not saying that they can't, but right now what this looks